Right, good afternoon then everyone, as we're at the end of another week of trading on Friday the 8th of March. So there are a couple of things to go through over the course of this week. The Bank of Canada, we were hoping for a bit of weakness on the Canadian dollar off the back of the Bank of Canada, but unfortunately they did come out and said it was premature to talk about interest rate cuts. There was no need to talk for interest rate cuts just yet. They need more to happen in terms of inflation or disinflation, but inflation cooling down. They have more work to do on inflation, and it is premature to start thinking about interest rate cuts. So we're hoping about some sort of guidance on when we might see cuts, as markets do believe we will get some in June of this year from pretty much every central bank. So the Bank of Canada kind of disappointed for us this week, but a chop on the Canadian dollar off the back of that. Then to the second of the central banks, the ECB, which again showed a very similar a very similar kind of rhetoric. I mean, they're awaiting wage data. I mean, the ECB said themselves they're awaiting wage data in May of this year before making a decision as to whether inflation is sustainably lower. If an increase in wages is likely to cause a spike higher in inflation, they will want to keep interest rates slightly higher for longer. So this meeting and next month's meeting, so March and April, are probably a bit nothing meetings. We said that earlier on in the week when we were looking at it, and that is what proved true. April's meeting probably likely to be a bit of a non-event until we get that wage data from Europe out in May, and then they can start the decision on when to cut interest rates, as their economy is not exactly trucking along perfectly. On to then Jerome Powell. Some comments on Wednesday and Thursday from his testimony in front of Congress, suggesting that it is nearly the time to start thinking about cutting interest rates. They are close to thinking about cutting interest rates, or they are close to starting to cutting interest rates, and they will cut interest rates this year if disinflation continues. So the talk of the town was on interest rate cuts, and he did come out and clarify to us, we will get interest rate cuts this year, and they are likely to be relatively soon. And he did note the difficulties or the potential problems if they keep interest rates where they are at for too long. So the fact he's saying we're going to hike interest rates this year, it is approaching the time when interest rate cuts are soon. I think I said hike before, but he said they're gonna cut interest rates this year. It is approaching the time where they think interest rate cuts are going to be soon, and also noted the fact that if they keep rates where they are for too long, that is going to cause probably widespread problems across the economy. So he came across pretty dovish over the course of the 2 days, and that has been reflected in prices. You can see the trend on the US dollar over the course of this week across the board. You can see the Aussie, Kiwi, Euro and Sterling, and then dollar Swiss, dollar CAD, dollar yen all pushing lower. Gold then pushing higher along with that. Dollar yen, interesting. Some ex BOJ officials coming out and saying that they do want to see, or they believe we're going to get an interest rate hike from the Bank of Japan in April, and it seems to be a pretty widespread market consensus that we will get one in April. We got officials and ex-officials saying we're likely to get one in April. Japan exiting negative interest rates for the first time in a number of years, in a decade. That is likely to be something that strengthens the Japanese yen, and has done across the board over the course of this week. If you look at the Japanese yen across the rest of the major currencies, Japanese yen strength is the theme over the course of this week. And then back end of the week, as you can see, US dollar weakness, bit of strength in equity markets. You can see the S&P and the Nasdaq pushing higher, the Dow Jones and the Russell not managing to notch as much gains, but ultimately still a positive week, shall we say, for stocks. Big downside on Tuesday though, off the back of that ISM services PMI, which was an interesting one. Weak economic data, the markets did not enjoy that. The Chinese also were out over the course of this week, annually week long parliamentary discussions, kind of letting down on potential stimulus packages for the economy. They did obviously announce some, but not as much as markets were hoping for. So we had a bit of risk off trading coming into Tuesday. Then this data came in and kind of compounded that. So a pretty negative day on Tuesday, but ultimately stocks are to finish the week higher. If you look at the S&P and the Nasdaq, that is not quite the Nasdaq. We're at the highs of the week in the Nasdaq right now. If we can get a little bit higher, well then the Nasdaq will close at a weekly high. The Russell will close at a weekly high. S&P is at weekly highs as we speak. But US dollar weakness, stock index strength certainly back end of this week. Yields continue their moves lower. Dovish comments from Jerome Powell continue those move lower on yields, and bit of whipsaw as you can see over the last kind of hour or two. We have had NFP at 130 today, a notoriously difficult NFP print. Previous month revised lower, as you can see here, actual 275 for the month of February versus a consensus of 200. Now that sent dollars higher initially, sent stocks lower initially, then the other numbers started to filter through. We got the unemployment rate here. Let me go back to the medium so we can have a quick look at it. We go to Friday and then we can see the unemployment rate. As you can see, 3.9% versus a consensus of 3.7%. So the unemployment rate ticked higher. You've got average hourly earnings month over month below previous and also below consensus. The year over year figure below previous and also below consensus. So the NFP print came in, pushed dollars higher. Everything else came in and sent markets back the other way and caused extreme levels of whipsaw at the release, which you can see across here. Fair few people would have got nailed on that. Certainly that first candle went lower pretty aggressively to begin with, but that's across the Aussie. So the US dollar went higher to begin with and then back lower. Now we've kind of met back in the middle and nothing to see there apart from a candle with a couple of long wicks. So we'll see how markets close into the go into the close, but with broad-based US dollar weakness, decent equity strength over the course of this week, I'd have to imagine the major moves across financial markets are probably done for this week. We'll come into next week, flick up the economic calendar. Where are we at into next week? We do have inflation from the US on Tuesday. Now we will cross that bridge when it comes to it on Tuesday. We'll release a video breaking down the week when we get to it next week. But with dovish comments from Jerome Powell over the course of this week saying if this inflation does continue, if inflation continues to come down, rate cuts will be imminent. So keep an eye on that next Tuesday at 2:30, which is at 12:30 on this, normally at 1:30. Did the clocks change in the US this weekend? I probably should know that before I started this video, but I'm gonna go with that economic calendar because we go back to this week. Yeah, I mean the numbers are all right on this 1:30, so that'll be an interesting one tomorrow. Next week, I will actually have to double check when I get off this video. As I said, probably something I should know before I go start recording the video, but again, I didn't actually notice it before. But yeah, 12:30, probably likely due to the fact that the US clocks change before ours. So yeah, we'll update further on that on Monday, but that is at 12:30. It makes it a bit earlier. Then we'll look at US Open being 1:30, certainly for a couple of weeks, which is nicer if you're a trader over these kind of hours, but we'll cross that bridge when it comes to it next week. Pretty busy week in financial markets this week. Moves lower in the dollar, slight moves higher in equities. Bond yields continue their moves lower. Oil's a bit all over the place, so I haven't spoken much about that. But anyways, hope you had a good week. If not to worry, there'll be another week next week and we'll try and take advantage of it. Clear blue skies here in London, which is nice to finish off the week on a Friday. Let's see if it lasts over the weekend, but get out and about a bit if you can. I think we're out of the winter months, we're approaching summer, which will put everybody in a better mood. So have a good weekend all. Do recharge the batteries and we'll update on Monday for another week of trading next week.